Good morning and welcome to the Breakfast Club. It's October 10th, 2023, and we got lots of kind of interesting stuff happening. I like the way we have this breakout here in gold to the upside. We've broken through a nice fair value gap here on the daily into a second fair value gap. We broke through it. Now I'm looking for it to come back and give us some support here at the top of this weekly new week opening gap, and then try and get some more strength to get above this daily fair value gap above. So here's the kind of fun thing I'm kind of looking for, because this may be just a simple momentary return for a continuation on the downside. I still believe, I'm still not bullish yet, but I still believe we got more draw on liquidity for gold further down. This could be a new price leg. I'm making sure that I make absolutely sure that I'm verbalizing this. If we just get a run back to the top of that fair value gap, we're looking at this next price leg down into this region right here, and I'm going to make sure I mark that so it's on record. Where this ends up, if we break below here, this opening, and come back to it, my eye goes down to here for a price leg run down to 1730, which is in the middle of the fair value gap on the monthly and the weekly. So that's where my eye's going right now for the downside. There's some nice ETFs here in Canada you can get a hold of that pay really good dividends, and if it gets down to this level here and the dividend holds, it's a really good discount price for GLCC. Just the name of a company, an ETF that trades with gold companies. So that I think would be a good discount. This pop-up I think is just a red herring, and we're going to continue down on the downside. But anyway, let's get back over here to GBP. Did a couple of live trades off this morning. I just nibbled some profits. Sorry, I'm back doing that same thing again I do every morning. I have to get back on my make sure that if there's some rare case that somebody actually turns up to my channel here, that they can see all right, just little old me in here right now, but that's okay. This is my video diary for October 10th. Okay, so GBP daily. We've just come up, we've just popped above this high here. We've just slightly popped above it. So if we look at the counter, that is a high of 122.718. And this is 122.761. So we've just popped up above this high, and we've pulled back into the new week opening gap. So have we just run this high as just a quick little stop run, and then we continuation on the downside? We did find some support off of this daily fair value gap. We came through it, ran through it, came back, tagged the top of it. Now we're working in all these new week opening gaps. There's 3 of them sitting overlapping themselves in here, which tells me you could be just running into a consolidation. Again, I've never been in a situation where we have 3 overlapping new week opening gaps, and I've never heard Michael mention anything about it either. So from that perspective, it's new territory for me after 7 years I've learned this new week opening gap not too long ago when Michael brought it out. I'm dying to put the old bot on here and catch a day where we have a full upward day and then just have the bot run on a bull. That was that little tiny fair value gap that came back, hit it. We're just coming into it again now. I know you guys probably can't see it very well here, and I can't really expand it, but I'm gonna move this along here. I'm gonna put one right there. That's it. So as you can see, we've just hit the edge of it one more time. So now we've gone through it. We're coming back into it again. Now it becomes inversion. We've just tapped it and pulled away. But we have all those overlapping new week opening gaps. And we have order blocks. Yeah, I can't really say much for Euro. You'd have to dig down. We're going to have to dig down into Euro deeper if you want to get a quick scalp off there somewhere. The CAD today, we're getting a little pullback into this range here. We've just hit 50% of this small range. We've got fair value gap here. We've got another little gap down in here at 62%. So my guess is we're still going to keep coming down into this range here. Ideally, you want to see this stay open and for this to start pushing back up to the upside for the next price leg up. We'll see what it does here. I'm going to put a little box right here. And we'll see if it holds price right there. That'll be the optimum trade entry for institutional order flow entry drill. Optimum trade entries all inside there. So we'll see what that does. I'll come back to that a little bit later. Natural gas daily. Keep your eye here. I want to see this stay open. These would be nice to stay open and trade back to this, leave this open, and then continue on the upside for the next price leg up. If we did get a price leg up, this is the kind of thing I'm looking for. Again, this is my video diary, so I want this to be the next price leg up. So I'm going to draw a line across here and just kind of see where that lines up on the daily for me. We've just had the opening, New York Open. Let's make this a little. Okay, so it's the edge of this. That would be the next price leg up for here. Makes sense to me. Right to the edge of that gap in price and this SIBI downside delivery right before the gap. So that would be the next price leg up if we get a draw back down into here. On natural gas. So keep your eye on this price right here. And if we don't, if we get this, if we get it to the top of that, and this stays open as a price imbalance, then we're looking at this price. That should bring us right into the edge of right there. Perfect. So I'm okay with seeing prices kind of degrade a little bit down into here. That'd be 10, 14 cents. Okay. Let's look Australian dollar. Aussie dollar, I want to see this now. Find support right here. Gonna move this out here. I want to see it come back into here, find a level of support, and then start to kick off and start coming back up in here. We're going to start to drive up into December. We're going to pull back and then drive up again for the rest of the year. So I'd like to see it start running up above these highs here, because right now we've hit the rejection block. We've come back into the wick. Let me get this out of the way here. So you hit the rejection block, the wick, this wick again, and we found some resistance. So 25% of this wick we've pulled back into the range. So if you take your, I'm a little fib crazy, I love fib tools, of that whole range there, it's created 50%, brings us right back to the top of that fair value gap. So that makes total sense to me. I'd like to see this come all the way back into. So if we lose this one, no big deal. Get back to the 50%. That's the discount range of this. We're not bullish yet, but that would be my idea for a step up to get above here, and then eventually start driving for these higher prices. So I want to see this find some support off of here at 50%, and it can dip slightly into it for a discount range. We got 5 gold ball days. We've come all the way through the midpoint of this wick. We've worked it again. We're staying inside this little small imbalance here. It's not an imbalance, it's a sibby, Darren. It's a sibby. And it's been worked and worked. There you go. So we've come into it, through it, hit the edge of it, come all the way through it again. Now, we also have another one right here. All right, so we've just kind of hit the edge of it here. Body didn't really work. It did pop above it on a daily basis, but I want to see the a full body get up on top of this thing, then get back down on it with a wick and start to push through on the higher time frame. Hang on a second, got somebody at the door here. Okay, sorry about that. I had a deer in my backyard. He has to get through a little gate in order to get in the backyard. It's fully fenced, so that's a treat. We've never had that before. I walk back there and this thing's like, uh-oh, how am I going to get out of here? He's between me and the exit. So no, my father-in-law's in there taking a picture of him. Anyway, sorry about that. Let me get back to our analysis here. So yeah, we pushed through on the fair value gap wicks. Still haven't got any support. I'm still not bullish on this yet. I've got nothing above here that really supports price to go anywhere for New Zealand dollar, even though it's the stronger of the two of the pair. See, we've worked the highs. Haven't worked the highs in the Australian dollar, but we certainly have worked them on the New Zealand dollar. Let's go to, I'm looking for downside on S&P 500. I'm looking for it to get up back up into here. If we get a measure of support off of the top of the fair value gap on the monthly and then the daily, we find the midpoint of that. If we work that, come back through, I see potentially this being a new price leg all the way back down. Again, that all depends on whether or not we're going to here or here. Look at this end here. So I'm looking for here or here. So if that price leg comes up, where does it kind of line? For me, I just look for a place for it to line up to for a decent price leg down. And it seems to hit right in the middle of our weekly fair value gap with these old lows back here. So in order to run those lows, if I was looking over here to run these, I'd say, okay, well, what lines up? Well, how could I run those? What would be a good place to go to? Well, the bottom of that fair value gap right there would be enough to run the equal lows out and get back into this fair value gap way back here and run these equal lows out below. So look for maybe this to hold price. If we just come back and tag the area, the end of it right here, and then start driving back down, that could be the next price leg down for me on the downside for S&P 500. Again, I want it video recorded in case I'm bang on the money here. And if I'm not, hey, I'm the only one turning up at this thing anyway, so it's all good. My buddy from Jersey's not out today. Where's my buddy Kevin? Oh, I better put the old open this up for possible people turning up, which they don't usually do anyway, so put the Breakfast Club on. Now, I like that area there, so I'm going to put this down to the 1 hour. And we're keeping our eye on this area right here. 10 o'clock. So going to run that high out. Then what I want to see is a breakdown, create a fair value gap, get in on that. That would be a run up in price for sure. Yeah. Okay, that's my eye. My eye goes there today. This could be a nice little run back into this side, back into the new week opening gap again. I'm going to put this one in here as the new week opening gap. I'm going to put that there. What is that one? Close is 43.13.42. Okay. And then got. That would put that one there. All right, that's a new week opening gap. Oh, there you go. You'll be surprised. I thought my guys working hard there, New Jersey, keeping everybody safe. How's your night? Did you get some sleep, or were you working night shift? Did you get your mic yet? So many questions for you this morning, Kevin. Doing things around the house. Lost track of time. Nothing wrong with that. I just had a deer in my backyard. Never happens because we have a big gate and like a 6.5 foot high fence, so they can't get over it. And the gate must have been open, and he just come wandering into the backyard. So my father-in-law just said, "Hey, look, the deer's in the backyard." So I walked out there. It's like, oh, you could see the look on his face, like, oh crap, it's between me and the exit. And he's hopping around in the back like, how am I going to get out of here? So I just left the gate open. He'll get out of there eventually. He'll work his way out. They always come in and steal flowers and eat flowers. Eat the petals off of anything they can find this time of year. Last night was brutal. Couldn't stay awake. Oh, no way, really, hey? Didn't order anything as of yet. Wasn't waiting. Was waiting for today for Amazon sales. Oh yeah, it's Amazon sales today. So I'm looking for this. I don't know if you caught the last of my discussion on the S&P 500, but I'm looking for a run back up into here and create a new price leg down. If I get something here that pops in and gives me some support, like if I get a drop down, create a fair value gap, pop back up into it, and then I'm going to get short on that. And this one I may hold for a longer period of time. I have to check my chart here for S&P. S&P, oh no, they're minus 40. Minus 40, I'll get hit on a swap short if I try to hold that for a long time. All right. Well, we'll see what that's like, because tomorrow is a triple. They charge triple on Wednesdays, so I'm going to make sure I don't go with holding this too long. If I take it today and then tomorrow I find another opening, if we catch this nice run down today, if it gets below here and gets into this new week opening gap, we start to drive through it. I like that idea, and we find some support at this fair value gap as an inversion. That would be a nice opportunity to see my price leg start to manifest itself. I won't marry that trade, but it's definitely an idea. Oil's just come back now. We broke above this order block, come back into it, hit it here. Now, do we continue up? We're between these two weekly fair value gaps, so I've got no call on oil right now. I couldn't tell you. Daily wise, there's not a lot. Thought the triple hit was only if you held it over the weekend. No. They will charge you for the weekend on a Wednesday. So they give you a triple hit on a Wednesday in case you want to hold it over the weekend. So you definitely don't want to hold it on a Wednesday, because they'll hit you times 3. Because they're not gonna. You have a better chance. Here's the logic behind it is that you have a better chance to say, hey, look, this is worth holding over the weekend, or not on a Friday. So Friday you may go, no, markets look like crap. I'm not going to hold this over the weekend, and they could have got extra money out of you for a swap, so they charge you in the middle of the week. Does that make sense? If no weekend hold, it's just regular 1 day fee. Yeah, it is a 1 day fee regularly, except on a Wednesday. You'll see. Let me put this up here. You'll see when you go to your symbols chart here, and you go to the indices. Just pick an index like S&P 500. Scroll down. It'll tell you what the spread is here. It's a floating spread. That means it'll open and close at their leisure. And you look for right here your swaps. Their swaps are actually minus. What did I have? Ooh, it's quite significantly different. As compare, I must have been using it on a different. On a different server. So this one is actually a short swap. This is plus 41, so this would be worth holding on to over the weekend. Okay, that's good. This would be, if this is my new price leg down, it's worth holding this because they'll pay you triple on a Wednesday, and then by Friday you can decide whether or not you want to keep it over the weekend for a continuation on the downside. But swap long, minus 112. So you're going to get hit pretty hard. And triple that, 336. Ouch. So that can be quite brutal. So anyway, that's how those work. So you look for here your swaps, long and short. So I'm going to have to change my, I don't know, I'm using my live account. So this one is a demo account. So the demo pays me to hold it short. Oh, and I didn't show you why it was on Wednesday. Sorry. Let me get back to here. And then you look over here for when they charge triples, swap rates. Oh, see, again, I'm lying. On Friday they charged 3 times. So, but if you go over here, like, let's just pick a currency, like, give me something that's USD connected. There you go, British pound. See, on Wednesday, they charge triple on Wednesday. So S&P 500, it's triple on Friday. It's good to know on this demo. I have to check. I have to go back over and double check, make sure my I'm writing this down on my spreadsheet properly. I usually just put Wednesdays as my triple days, so I have to make sure I double check that. Yeah, so that's how that works. So you look for your swap rates, triples on Wednesday, regular every other day. Six more minutes, excuse me, before oh, I gotcha. Ouch. Okay. So gold. I'm looking for this next price leg down in gold. Same kind of thing here. If I get if I get a break below this gap and we come back into that gap, I'm going to go short and expect a run down into 1730. On my pre-market analysis this morning, I was talking about if this is the new price leg down, that this was just a Judas swing up to sucker people into a long play, a reversal, and we end up driving down. This could be just a pop-up for a final run down for another few. That would be 1, 2, yeah, that would be 1, 2, 3, 4, 5, 6, 7. 12, 15, 16, 17, 18, 19, we could get 1, 2, 3, fourth. The fourth week, the fourth week of the month, which is the 23rd, fourth trading week of the month, is the 23rd to the 27th. And I'm expecting it to be nuts that week. There's going to be lots of bouncing around. So we still got 2 more weeks to almost 1, 2, almost 3 weeks of potential play for a downside run. So this could be the run into here, and then I'm expecting some changes to happen. Anyway, that's a speculative long play. If the moment it starts climbing above this, my possibility of a price leg diminishes if I start getting into this area right here. It diminishes. Still, those 3 PD arrays there. These here. Well, let's see if I'm right. 1730 is my downside objective there. We got 4 more minutes. I'd like to see oil get back into this gap that was created. Just come back and tag the edge of that gap, which would also be the top of this breaker here, which is this gray line here. I see it coming back into here. Tag the top of this. Then I don't know if are we going to get support off of that, or are we just going to continue to drive back down and start dropping prices back into this higher draw on liquidity. If that is the case, then look at that. Right here. Next price leg down. That's a huge price leg. But we're getting into the low 70s now. Every time people say, oh, no, there's no way gold or oil's going to $100. Yeah, well, here's our consolidation. We come back into the consolidation. We can usually hit the top of it. Once we break out above it, we usually come back to the top of it. So here's the breakout above, come back to the top, right there, nice and even. Work your way up. If it does come back to it again, we could just run these lows. There's a little tiny fair value gap down in here, and then you look for 50% of that range. So this could be the next price leg down. Don't know. I'm just making sure it's out there. It's in the world. I'm just letting it sit and ruminate. S&P 500, here we go. That's the run above at 10 o'clock. Now I want to see this turn around, eat through this, blast through that, and call this next run down. That's right on the tip of my price leg. And again, I can adjust the price leg. I'm not worried about my perfect entry on a price leg. That would be way too magical. Now I start to drill down because we're 801. We just ran old highs out. We just ran the old highs out, right? Yes. We just ran old highs. So we're into this daily fair value gap again, and we're still in that monthly one. So are we still going to push to the higher one? The midpoint of this and the top of the monthly fair value gap, and then work our way back down again? Or there. So anyway, I'm looking for a reversal at some point. I may not get that till the afternoon, but anyway, let's kind of look at this spot here. These are the potential silver bullet entries that Michael talks about, but I'm going to wait. How you looking on your GBP euro? What's my tech looking like? Tech's a breakout to the upside. Ah, okay. So we've got look for that spot there. Looking at GBP, or the gap in euro. There's so many overlapping new week opening gaps there. Keep your eye on the upside here. Rejection block's already been hit. Look for this to turn into an inversion gap if we can get on top of that to continue pushing up. Or if we get below it, come back up. Look for it to run down into this stuff here. There's several different things you can look for in that one. Oh, yeah, the fair value gap. See it's pulling away now. We just broke, this becomes an inversion gap. We've come through it, come back into it, found some support at it. Here, you want to see this continue on the downside. I still like the fill of that fair value gap. I don't want to see that lay open too much. Where we got? So let's continue on the downside there. And these guys are just waffling here on the 500. On the gold. I'll move to the hourly on gold and see if I can see something here. There's your break in structure. Come back up, find support. Is that going to hold price now? I want to see what's skip below here. There's nothing really up there. Nothing too juicy for me to get in on. If I would have seen this one, this would have been the nice entry right here. Body gets below this, comes back into it, finds some support here, and then starts breaking down. Stop loss will be sitting up in here. No, I wouldn't want to see this yet retest this high here. You want to see it. It's hit the threshold of this order block. You want to see it continue down. I wouldn't want to see it retest that high. Really, you want to see it get below all of this stuff. Come back up, find some support in here below these fair value gaps because they're objectives for downside. Same with this situation. See, we've got all these downside objectives if you're retracing back into it. But this could be a new price leg up even higher yet. So I want to see, I want to see this big push through this. And we're coming up for we said this guy was going to break above. So he's just got a little bit of higher. Now I want to see this turn around and start coming back down. So if I get a downside support here, consolidation, breakdown, fair value gap, come back into it, I'll get short right there. Not that I'm picking a high, I'm almost marrying my idea that we have a new price leg down if this runs up. So I'm sitting on that, sidelines for that. Gold sitting on sidelines for that. This one here is not really acting the way you want it to do. You don't want to, I wouldn't want to see it retesting this. You want to see it start getting down here now. So is this the next price leg up? Now I'll take that as a price leg up if it breaks above this high here, comes back and finds some support here. It gets through this order blocks threshold. Right to the edge of the new week opening gap. Yeah. You got to be flexible. You got to be able to. So here's what I'm looking for. This price leg to happen now. I want to see this get on top. Get some power. Come back through this. Find some support here. Leave this open. And look to go up. Run through 3 of them. Give me a big bold candle up. Like that. Run through 1, 2, 3 PD arrays. Not quite. There we go. Now you want to come back, find support at this. Now you want to leave. I love it. It's like I'm telling it what to do. I love it. Now we just hit the rejection block here. Check the percentage on your bot. Yeah, I haven't got my bot set on. I've got my bot set ready to rock and roll, but it's in this guy here. It's in British pound. I haven't got it set anywhere else yet. No, that's the only place I got it set up is a British pound right now. Yeah, this is the run up now. I think this is the next price leg up. If it comes back in here, this is my silver bullet setup. That's the silver bullet right there. Could have taken it there, but I'm going to wait for a full fill. Can't get more precise than that if that's the fill. I'd like to see it come in here one more time. Tag this. Or it could just leave. That would have been the perfect entry. So if that's the next price leg, and I'm all right with being just an observations for it today. Still early in the week. This could be the upside. objective. I don't think this is done yet. We could swing back into here one more time. I haven't got my fair value gap above that high. It's fair value gap below the high. So usually you can get kind of sloppy after that. We'll see. Just a rule I'm making up. That's not a Michaelism. That's just my Sanderanism. Okay. Wow, talk about precise, eh? Come all the way back to the edge of it. Now you look at the pipettes. There's probably one pipette below that. So that's the low is 129.80, and this one here is 129.55. That was just enough pipettes to get below that and run up. Come on, dig down in here. Big wick down and leave. Right now it's coming into the order block. It's the high, the open. I got in at just under 15, 128. Oh, good for you. So you're in then on that silver bullet. Good for you. This is what I'm waiting for. Come on down. Now we're through the open threshold. There we go. Threshold. Threshold is holding. That's a legitimate entry too. But I wanted this. May not get that now. If that revisits that, we might actually get it. You want this to hold right here. Boop. Good. This is probably going to drive back into the objective again. In for more at 15,139. 15,139. You put another order in there at 139. Targeting 15,170 to give me 2-to-1 ratio in the first order. Okay. It's a lot of chop here, but this is US Tech. What is the 500 doing? Is 500 giving me my run yet? Still got no play on Tech. Oh, 500. Tech just ran that one again. Well, I hope you get your run, man. It wasn't meant for me to be in there, I suppose. 15,170. Yep. That's the first objective. That's the full complete. So take a partial off there, because that's the full fill of that fair value gap. You may just stop there and turn around and come back down pretty deep. So if you take a partial out there, targeting the September 23rd fair value gap. See, that's the fair value gap right here. Yeah, I see where you're going for. So that's the bottom, partial, and then run for the rest of it. Or do what you like. I think that you might have yourself a winner there. That's just up into that fair value gap. That's why you always pay yourself at fair value gaps. All right. In on euro. Oh, you're a trading machine today. You're about to hit your first objective, or your objective at 1550, 1517. There's the price leg. Euro 105.90. 105.90. Oh, you're down here. Yeah, you're aiming for up here, I suppose. I don't know what your upside objective is in euro, but that will be a nice little pop up there. This is our objective right here. Euro target is 820, 23rd. Fair value, yeah. Up there. Reaching for the highs. Yep. I concur. So far it's made to 169.25. You'll get it. Out of NASDAQ enough, close enough on target. Yeah, good for you. Well, that was the price leg. See how we had the objective was we were going to start driving back down, and then when you see this and go, oh, wait a second, that could be a nice next price leg above. Now, if we get above this fair value gap for it to become an inversion, and it was right here is where it tipped its hat and said, okay, I'm coming back into the midpoint. I can tap it one more time. I'll give you one more chance to get on, and then we're out of here. So that was the silver bullet. So see how you can get, here's the silver bullet here. There's the 17. So you come back into that. Silver bullet supports Michael's first one here. You get another one here. But then you get one here for a reversal. So now, are you coming back for this one? And if your stop loss sitting below this guy here, you just got taken out. If that's your initial objective, being the very first one that occurs at 7 o'clock or at 1700 or 10 o'clock, and you get the full fill there, you would be right on the money, and you would have got your full leg. 1, 2, almost precisely. It'll come back up there. So the next thing is this 25.50? Is this just a 25 and a 50? And the next price leg is for the rest of the day. Does that continue past here? You take this end here, stick it up here. Well, as soon as you get a retracement, then you stick it on there and run back up. So 25, 50, 75, 100. Out at 15,164. Well, there you go, my friend. You 7 pips, 6 pips short of your objective. I don't think you'd be too upset with that little run up there. What was that? That's 35 handles. Well, if you got in right here, there's the 70. Woohoo! Ka-ching! There you go, and it gapped up. Now, what if this was the price leg? Brrr. And this was the objective. All right, well, we hit our objective there. Now that's the next one for me. I'm looking, this is the next price leg up. How? Yeah, you're feeding your own wolf today. Good for you, man. Well, we couldn't have called a more precise entry right here. I just got super picky. I wanted to get the whole thing, but that was literally it for that run up. You would have been absolutely zero drawdown, and you'd be on the teat right now, feeding on the teat. That's a good day. Did you hit that with your demo, or did you hit that with your other account? Because they're going to be like, okay, you've already proven yourself, man. Stop driving the price up. Hang on. Let us get you live first before you start running your demo account through the roof. All right, let's have a look at what's going on here. So my original idea for this, so now we're looking at the top there. I'm looking at this midpoint. The top of the monthly fair value gap would be the middle of the daily fair value gap. I'm going to see if that provides support now. So I'm going to move this over to here and see if we can see this is the upside. So I'm looking for it to finish here. If I keep trying to support my downside objective push for the week. No live account, first trade with it. That was your live account? That was your first trade with your live account. Euro trade, currently down $80. Well, your first live account, they must be sitting there going, ooh, I like this guy. He's made money already. So your Euro, yeah, you're looking for that one up there. Yeah, you're in a consolidation there. So you want to see it stay above here. Dip into it. It's fine. Start pushing through it now. Now for me, I wouldn't want to see it retest the bottom of that. I want to see it take off now. For your Euro play. Because we're below this one again already. Yeah. You could come back and retest this down here. This is equal lows. You're in a consolidation now. You're compressing. Same thing with these guys. Gold's still coming down, or oil's still coming down. Gold definitely kicked off of our play here. I like this if here. We're finding support there. I like to go short on that. And I'm going to go just up there. Okay. First trade with it. That's good. Did you keep your leverage? I will hope you kept your leverage down low to start yourself off. This is our US Tech one. Looking for that objective there. So if this was the entry, my objective for the rest of the day, so we would have taken off a big chunk off of here, and the rest of it you let run for. My next objective would be right here, just off the new week opening gap, and leave that top piece, because sometimes you don't get the full leg. You do get, sometimes you get it blasting all the way through, sometimes you just get just short of it. So that would be the higher objective. Little gap down here, watch that. We've gapped above this high. You want to see that stay open. I want to see that price stay open right there. Yeah, I saw that I saw this fair value gap here. This fair value gap, it looks like it's providing some support. So I've got, this is a downside objective for me for gold. So I do like that one. Now, wouldn't it be fun to put this bot on this thing and start running it? Gold sucks with this bot though. I just want to see this hit our objective, just to, like a personal vindication or a personal haha. We call the price leg. I like that, and this would be like the hold it, just hold it and expect your outcome. Wait for your outcome to hit. Well, I almost feel like putting the wolf on here and feed the wolf a couple of times. Let's take out 10%. 0.5, close. Thanks for the delay, assholes. That was a huge delay. Tech, do we get it? Come on, drive up there and give me this. Oh, okay, I like this. We have a breakdown. Bodies get below, come back in, drive down for downside on British pound. I like to see a nice little body get down there, so we've got a fair value gap inside a breaker. Trade the middle of the breaker. Yeah, the fair value gap's not below it, so you wouldn't trade the fair value gap, you trade the breaker. So I would probably wait for the midpoint of that before I started going short. We ran these lows. Let's take off that. Let's take off some more. Yee, oh, feed the wolf. That's my little feed the wolf. What do we got here now? Now, wouldn't this be cool if I could hold this? Now, what does this guy tell me if I hold this over the next few days? Symbols, metals, and the gold. Gold. Oh, look at that. 24 short swap. If I continue holding that short, that'd be worth holding on to. Yeah. Look at that, equal lows down there. There you go. Good gold play. Take another 10% off down here. Thing is, I didn't take this on my live trade. Should have taken this on. Like this going, oh yeah, I'm killing it on demo. Didn't take my live account though. But that's all right by me. And here we go. Zero stress trade. We'll put it in there. Zero stress. I have to remind myself this is a zero stress trade. Zero. Stress trade. Ah, what the hell was that? Description. Try it again. Zero stress. Zero stress trade. Guaranteed profits now. We've already taken some scaled out, some down here. We'll take another 10% off. I don't want to see it come back up into here. So I'm moving that down. Take another piece off. Wolves eating good today. You got that right, brother. You got that right. You did good your first day on the job. Hauling some pips. Good for you. I like to hear you making money, my friend. Maybe you can buy yourself a new truncheon or something like that. You guys don't use truncheons anymore, do you? You probably don't even. Well, you should know what a truncheon is. Do you know what a truncheon is? You get yourself a new shiny blackjack. You're 42. You're old enough to know what a truncheon is or a blackjack. Oh, look at that. We can't stop pushing that 1,000. Billy Club, yes. Well, the old blackjack used to be one of those, it used to be like a flexible rubber handle with this lead ball stitched into the head of it. They called them blackjacks. They used to crack people with them things, boy. Back in the day, I've never been hit by one, but we used to have this friend of ours who was a not conservation officer, correction officer at Headingley Prison in Manitoba, and he used to have a little blackjack. All right, let's take another little piece off of here, just because I like to feed the wolf. The wolf's a happy wolf. Ow! Take some more. Zero stress trading. God, you're gonna love it. Blackjack, yes. Oh wow, look at this. We're gonna take some more off down here. I might actually just leave this on here now. If we got zero stress, we might as well just let her buck. That's $220 if it comes back for us. So I've taken off what, 2/5 of our trade already. We have 3 handles left, or 3 lots left on. So this could be just a run down here. Then my eye comes back to here and I go, well, what's 50% of that range? Am I inside that? Could it easily come back and take me out? Yep. Come back, reach for that there. So let's take another 0.5% off, 0.5. Bling. Take that off. I don't want to see it eat too far through that. Close it out. I'm out. Well, there you go. There was a zero stress trade. Now we're looking at 50%. If we get back into here or here, 62%, I'll jump on that again. I'll tap that one more time. That was nice. I don't know how much we made on that for the overall. $875. Thank you, thank you. So now you see how it's retracing back? Get a little discount, take these guys off. What's in an area there that supports a nice little discount price before it continues down? Now we've got lots of equal lows down. There's a ton of liquidity down there right now. So a little pop up into here. This way you can't get greedy. Just go down to cut the thing in half. and go with half the leverage. I'm going to wait for, I want a full 62% retracement into here. Even 79 would be right back to the breaker. We have that breaker inside the fair value gap opportunity. So yeah, we'll wait. I'd like to see it get up and give me a decent premium to get in on. Oh, we have somebody else watching us. Somebody else popped in. Well, I hope you popped in right when we were killing it in gold, because we was smashing it. My boy was killing it over there in the U.S. Tech. First official day with his live account. Oh. And he is smashing some money. I love it. Euro. Did you end up getting your Euro play? How did that work out for you? Ooh, that did trade against you. Did you close out of that? I hope you're not trailing your stop loss. Hope you didn't trail it too far down. Did you get out of that? Tell me you got out of that. There's that British pound one I was talking about, getting in short. You would have been bashed around a bit, but eventually you would have got something. Again, scaling out at these your levels. Remember, we're just scalping here. A lot of people just say you're taking out way too soon, but we're scalping. We're paying us off like we just did in that gold play. We scalped all the way down here. We cleaned out some here, cleaned out here, and then double tapped and triple tapped in here, and then finally closed out up there. So is this a break in structure with a fair value gap? This has to stay open for us to start pushing back up for me. Otherwise, this is the next price leg down. Yeah, closed out. Good for you, man. Should have went in gold with you. But don't worry about it. Don't go shoulda, coulda, woulda, man. We have plenty. I'm here all year round. I'm here every day. We'll find something for you. I didn't get in on that either. I was just trading that on a demo account. I didn't even get on that live. So, you and me both, man. We're just getting started. This is only Tuesday. This is just Tuesday. So this is the open. We want to see it stay open, and I want to start seeing it drive up now. Who else we got in here? Type a hello on the side there. Or are you going to be one of those mysterious people on the sidelines just watching? Just me and Kevin right now. I've got a third person in here, Kevin. I don't know what to do with myself. This crowd's getting crowded in here. See, that's what we want to see stay open. Start pushing up. There's 50. Let's get a nice big deep retracement. I'm going to get greedy here and ask for a big deep retracement from the universe, the universal supplier of money right here. But be prepared, we may just see this. I like the bottoms of this. There's the close. There's a 62. It's like you're telling it what to do. We told it what to do. Winning streak continues. Undefeated. There's a 70. Come on now. Push on up. Get to our breaker. There's 70% optimum trade entry. It's a fill. a full fill of this guy here as well. That may be all it needs. Turn around and say, screw you, I'm out of here. Okay. This is proof, and we just $800 worth of proof right there. We just showed how you could take $800 out of the market, scaling out. Anybody who was holding that to go super long, who missed all the PD arrays and did not take them out in PD arrays, did not pay themselves, are now on the squeeze. And you missed all that opportunity to make money. And you can get back in up here for a short. Stop loss up here. Cut back. Your stop loss would be minimal here. To reload what you just made on here, your stop loss would be less than what you made overall there. And you get to reload on more money. So what I want to see though is this hit it. Create that little pop up, get some support at it, and then leave. Then we'll get in. We're not going to try to pick the high, because if this runs right through me, I was wrong. So we've got this gap here, this fair value gap here now on the 1 minute. Do we come back, find support at this, and continue pushing through? Are we aiming for these old highs here? So always think about whatever trade you're looking for. I'll go in on this one. Yeah, be careful. Be careful, be careful. So this is what I'm looking for is, yes, that is a nice little pocket of premium, but does it act off of this thing? I want to see how well it acts in this area for me to say, yeah, okay, I'm not going to take the high, I'm going to take the confirmation. Does that make sense to you? Just so you cut back your risk. You don't want to be taking your first day live and then stealing away some profits, because I think you're up some profits today. So these equal highs right here inside that fair value gap, that's my eyes in here right now, but I want to make sure that this thing here gives us some support. So come up, tag it, drop it, hit it, and then quit it. That's what I'm looking for. Wick. I want to see just a drive through, create a wick, come up, tag it. I'm going to get in right here after it's confirmed that this is the high. Because if it eats through this and you get in too soon and it starts to run up here for this liquidity sitting above here, because there's a little tiny pocket right there that's not filled yet. And that's when you get those little micro pops above. This is an optimum trade entry off of the breaker. Let's just hit it nicely here. We may not even see this. This may remain open. We have a breaker inside of our value gap. That's a juicy sucker right there, boy. Does that make sense to you, though, Kevin? What I'm looking for there? It's not the silver bullet. Now you're venturing. Remember, you're venturing outside of your thing that's got you to your live account in the first place, right? We're looking for the fair value gap, the inversion gap setups. Closed out my browser on accident. You closed out your browser. Maybe that's a sign. Maybe it's a sign. All right. So we're just popping into bang. That's it. We're in there. And that's 79% retracement. Alternate trade entry. We just ran above it. So we're going to watch how it plays in here. Now I want to see, just tap this. And sometimes you can leave that open. It's just like a little fraction, like we left here, a little fraction open. Is that the fraction that stays open? I like it. I'm going to go short there. But again, keep in mind, be very, very careful here. I don't want to see it get above here. This inversion gap here, I don't want to see it get above that. How do you learn ICT? Kiss it with the wick and leave. Yeah. If it starts to break through the top of that, I'm out. So wick in, body closes. What are we doing here? Starting to pull down now? Then let it run. How did you learn ICT? You know what? I was working up north as a paramedic up in the oil patch, and a buddy of mine had said, hey man, there's this guy that's doing he teaches people how to trade the markets live. And I'm like, oh, I don't know anything about trading live or trading the markets. So I was get ready to close this out if this eats through here. Oh, out. Come on, get me out, bastards. They delayed it. See that delay? They took another couple of bucks. So now we've got on top of it. See, that's why you got to wait for the entry. That was an example of what not to do. You don't want to get in on that. We didn't get the proof, the confirmation, right? We had the pop-up down, run through, that confirms that I'm wrong. And had we waited, or had I waited, I hope you didn't get in, had I waited, then I would have seen this take off and gone, good, I'm still not in there, because I haven't got confirmation that we've got the downside run, right? I tried to pick the top, and here's a great example of you get your butt slammed if you try to pick the top. Don't. No, we're running for that liquidity above the market. So, a nice lesson. Oh, sorry. Yeah, I was saying, how do you, hello, Zero. He was one of ICT's first students. Yeah, we were both, he signed up for his August. He signed up in August of 2016 and said, hey, you should try this out. And I'm always a big fan of continuing education. I'm a fan of lifelong learning. Absolutely think the best thing you can invest in the world is yourself in terms of learning. So I decided to, I started doing the silver bullet method about 2 months ago and just got funded with a prop firm last Thursday. Oh, Zorro. Oh, hey, we got a guy in here. Hey, Zorro. Good to see you, man. Do you think ICT is suitable for someone with no trading experience? Yes. Look, Zorro, let me tell you about my buddy here. Who said it? That's Kevin. Introduce yourself. Kevin, Zorro, Kevin. Now, Zorro, Kevin just started this thing 2 months ago, as you can see, and got a funded prop firm last Thursday. And he only just started ICT stuff last week, and this morning he's live and we're kicking it. We did some awesome trades this morning, and he's like, I come here every day and trade along and ask questions. He's very helpful. Oh, thank you. So yeah, I'm trying to help out. My whole objective here is to help people out and make some money along the way. This is my like video diary, so I kind of show you what I see in the markets, and we try to snipe, we try to get in, we try to do some bot trading, we try to do some live trading, and reading the market, watching the PD arrays, and seeing how freaking close we can come and just feast the alpha wolf. We are the alpha wolf when we're feeding on the market. So look for this last little pop in there. That guy ran just above him. Poof, there, done. That thing's now fully filled. Now, is it going to continue pushing through to the next array? Or is that it? Right there, with precision. Remember, we talked about this earlier, just that little tiny fraction above. I said it could go all the way up to here, that little tiny piece. Look at that, hammered it and quickly pulled off. Now, does it drive through this and come back up? That's all it was trying to drive up to. Clean the liquidity out of there, finish that last piece off right there with preciseness, and off we go. Thanks. Come join us daily. Just stick with one method. I only do silver bullet method, but Darren does other methods and teaches along the way. Order block now validated. Continue down. That's a valid order block. It's validated right there at that opening. Now we go back to low, open, threshold. Do we lose the threshold and continue back up? Or do we start to push down and get through this inversion fair value gap? Zorro, what I like to use is, I'm an inversion fair value gap kind of guy. I like to use inversion fair value gaps, and I cut all the way through candles, and I look for my key entry. So I'm kind of teaching it as I go. And Kevin has his morning setup. We have a morning setup that we look for silver bullet, and we've refined Michael's silver bullet entry because sometimes it's not exactly at 7 o'clock, so we've got a little delay we like to use to find the absolute entry or a better entry. We shouldn't say better, otherwise it's like saying Michael doesn't know what he's talking about, which is not true. He knows what he's talking about. So here we see that pull down, pop below, did not come back into our inversion gap, and are we pushing through? Because now we're creating more liquidity sitting above here. That's our last breaker, our up close candle. So we've got, what we have left is we've hit the bottom. Then the next thing we look for is the open, threshold, rejection block, 25.50. Those are the PD arrays above. There we go. Now we're getting the drive through. Yeah, this seems very interesting. We'll be tuning in. Also seems like you each have different approaches to trading. Oh, we've got different, not so much a different approach, but a different entry. We still use ICT's techniques, ICP. This is all about ICT concepts here. Quick question. For this ICT mentorship, how did you get it? I see videos online for the previous year. Well, I've been with ICT since the beginning. I was part of the original 800 back in 2016, so I was live with him every day, like you are with me. I was with him back in 2016, and he read the markets just like I'm doing with you guys here, and he taught us the markets. So you should, if you're new, are you relatively new? I just do the silver bullet. Oh yeah, Darren shares more information on methods that really breaks through things down to understand further. Just so I don't do other methods yet. Yeah, he's sticking with his silver bullet. That's what got him all the way to the top. Got him his funded account, sticking with something that is very similar. That's what you got to do, is find a method that works for you and stick with it. Stick with it. Do not venture outside of that until you're absolutely sure that you've demoed it, you've practiced it, reinforced it, and you know it works. Then try it. Always try it in demo. Never try to run a live account right away. But you should, if you're new to ICT concepts, then definitely go and study his core content, or just study the 2022 mentorship. It's like 40 videos or something like that. You absolutely have to go through it. You know, a lot of people say, oh, can I rush through it? Don't rush. If you rush, you can't rush getting rich. You can't rush this Michael stuff. You have to just find what works. And obviously, you don't even need any experience. As long as you're committed to following the rules, you can get a funded account within 2 months. And believe me, Kevin is a rarity. He is an extreme rarity because it's his discipline that has got him to the funded account. He doesn't know a lot about ICT stuff, but he knows enough to look for one setup. That's his golden entry, and it's got him to the point where he now has a funded account. So discipline. If you have no discipline, you will find real quick that this market will eat you up. Yep, very new. Complete beginner, understand a bit of the fundamentals, but haven't explored technical concepts. Got it. We'll have to look at it. Cheers. Hey, you're very welcome, man. And you come back here and you can, this is a place where we have zero stress. We try to have some fun and analyze the markets as we go. Ask tons of questions. If you're not sure about things, just ask. This is a friendly place for you to explore and try stuff out and kind of learn as you go. There's no pressure here whatsoever, man. This is a safe place for you to come. SMC. Find one model that clicks with you. Take the trade slow, nibble off the profits. I took 32 days, but I got funded with a $100,000 account. You both know about SMC, right? I don't know about SMC, but I know SMT, Smart Money Technique, or Smart Money Tool. SMC equals ICT. Never heard of it. SMC? What does SMC stand for? Sweet Michael's Concepts? Smart Michael Concepts? Or Smart Money Concepts? Yeah. Smart Money Concepts. So there's SMT, Smart Money Technique. SMC, Smart Money Concepts, sure. That'll be that. Smart Money Concepts, they call it, yeah. Okay, ran the highs. See how that came back, find support at that inversion fair value gap. Now we break above it. There's the body. Come back, tag it. Come back into the middle of it. Now we're starting to push through for equal highs, running for the old highs above. That's why you wait for confirmation. If we were right and we wanted to get back down low again, this was the confirmation to go lower, to get in here under and get support. But we didn't. We had the reverse to confirm we're still going higher. So we snatched this. That's the tester. As soon as we popped above, I'm out because I'm wrong. Now we got a body. Now some people say, why don't you just jump back in then if you know you're wrong? Because we're in such a premium array and we've just hit this. I want to get confirmation now. So I want to see a big bold candle get above this, create a fair value gap, come back in, find support, and do the same thing again. Like this example, we have break in structure. We start to run to the upside. We got a fair value gap. This fair value gap forms. We run back in, we tag it, and we start to leave. Then you're looking at one leg, two leg, three legs, and possibly one more leg above. I'll be right back. I've got to run to the bathroom for a quick power break here. I'll be right back. All right. Somebody goes with SMC is the same design. ICT is designed by ICT himself. Does not look at SMC for videos of course it seems straightforward. Yeah, he does. Yeah, I agree. There's a little bit of a drifting going on. Does ICT assume you have no technical analysis background? Yeah, ICT starts you off. If you start off with his core mentorship stuff, that's the stuff I did when I first started out. Now, Zorro, so you know, I didn't know anything. I was as green as grass. I didn't even know what Forex stood for. I didn't even know the name Forex, what it meant. When he talked about cable and fiber, I didn't have a freaking clue about what those things were. So you really need to start with the core content and go through what we went through back in 2016. It can be quite dry, the material. But if you really, really want to understand this stuff, go through his core content. And if you find something that you like, he has a full playlist. That one video brings you into the next day, and they refer to the previous videos. It's really good, although very long. Yeah. So we ran these highs out here. Look for this inversion gap to, I want to see a big bull candle get here now. Break through this. Create a fair value gap. It is. I see. That's the core content. That's the core content. The core content assumes you know nothing and you start from scratch. So if you know nothing, go there first, learn the core content, and then come back. Or you can just sit here and watch us trade during the day to get the idea. Just know that Kevin is an extreme anomaly, or he's proof that ICT concepts work really, really well. And if you just follow the rules or one trade setup, that's all you need. He's got one video in his, if you want to do the shortcut, he's got one video in all you need to do to make money for the rest of your life or something like that. One trade setup for life video. It's about an hour and a half long. Now, whether or not you turn that into a lifelong money maker, good for you. But his core content is what I did. And trust me, I knew nothing. Nothing. You know more now than I knew when I started. And it's taken me 7 years to get to this point, but also study IVT. Who the hell is IVT? Oh, ICT. I'm like, IVT? Is this somebody new? No, you don't need any experience to go into ICT stuff. Yeah, the assumption is that ICT is the core content is zero experience, 000 experience. Okay, that's out. That run for my stop loss, so that setup wasn't a success, unless it's just stopping at this breaker's threshold here. So it just ran up and took me out. Now it's already got a body through it, so it's upside. This could be the next big price leg up here. What's this? Daily. So look for that upside again. Did we finish filling that one? No, we never did. Damn. Just came back to the top of that consolidation. I didn't see that here on the hourly. Came back to the consolidation high. And we're pushing up for this here. And then we're looking for tomorrow or later on today. Look for the afternoon high, the lunch hour. So we're 9:30, 10, 11. So we're going into the lunch hour in the next half hour. So look for a run above these highs. Look for this high up here on the daily. And then look for a setup reversal in the afternoon around 2 o'clock. If we get this as our 2 o'clock high and we get a reversal with a setup. So the setup you're looking for is when you get to the top there, if you're looking on the 1 minute, 5 minute, whatever you want, you're looking for a break below market structure. So you need to see whatever the downside swing was. So whatever the little swings that are created on the downside or on the upside as you're going up, you want to see that break with a big bold candle, fair value gap, trade back into the fair value gap, and that's the short. That's the 2022 setup. So that's what we're looking for, that to happen around here later on this afternoon. So that's where my eyes are going to be going this afternoon to look for that. If we get that, then I'm going to be shorting that, aiming for this thing here and shorting gold. And if I hold it over today or tomorrow, then the swap will pay you out as well. It'll pay you a little portion. It might cover the cost of your trade. I'm not sure what the cost of the trade is, but that would be the objective that I'd be looking for the Tuesday high of the week, and then the reverse into the Wednesday, Thursday, Friday low. So we're looking for a high for today. That's what I'm looking for. Method before bought the funded account, and then it took me 32 more days to pass, and 2 more days for the first one. Live account. Personally, don't get in on a trade without knowing where my stop loss is. Always be aware where the next target. If you don't know where the next targets are, don't enter the trade. Good advice. Very good advice. So looking for more upside, look for up here for the day. So this is you're kind of watching this market now. So watch on the 1 minute. You should get continual support now for prices to continue to drive up. So we want to see this order block provide a measure of support, or this fair value gap, because now we've broken above with the fair value gap above. I return to here. look for a return into here. We want to see the rest of this stay open though. So you might want to get up to the high. Anywhere inside here, we want to see that stay open and this one stay open. Your stop loss will go below this one here. And we're aiming for that higher objective on the daily, which is way up there. Let me put that in on my hourly so you see what it looks like. Where's the daily? Up there. Cut your knowing where to place your stop loss. Again, you got to know your setups and you got to know where you want price to reach for. When you understand PD arrays, you'll know where's a safe place to put your stop loss. If you're wrong and it runs that PD array, then you know you're expecting it to reverse in the opposite direction. So you're always, stop losses are placed strategically. They're not just randomly thrown somewhere. You look for a specific array to provide support. If that does not provide support, then your stop loss is above that, then you're minimizing your risks. So your stop loss is just as strategic a placement as your entries are. Entries, we can have entries that are super precise. For example, this one here, when we had a break above this area here and we wanted to aim for these highs, and we found support here, we know that if it eats through this rejection block, we're wrong. So our stop loss would go just down in here. We know the wicks can come down and do some damage by coming in, but we don't want it to drive all the way through the whole rejection block or the inversion fair value gap. So your stop loss would go down here, relatively close, because if you lose it, then we're not, it's definitely not for us, right? So here's an example. The moment we trade through it, well, we're done. It had headed down for this objective down here. So your strategic placement of your stop losses are just as important as looking for your scale out points. So fair value gap, came down inside the fair value gap. Didn't quite get this one here. Got that first. Got the 830 reversal. Now we've got an order block. Come back, finding support at the order block. Threshold here. So if, for example, if you were going to get in on this trade, not that you will or should, but if this order block is validated, the moment we get above it right here, as soon as we trade back to it, that's your first entry, second entry, your last entry's right here, your stop loss is sitting right there. In other words, if it drives all the way back down through your threshold, then that's a sign of weakness, and we're looking for a return back into this level here. So your stop loss is relatively tight, and you're aiming for that first little swing high right there as a profit thing. So that's an example of, but it's also smart to close the trade if you're closer. Anyways, the market is unpredictable. That's what they want you to believe, the market's unpredictable. But you hang around here, man, you come see us every morning and you will find out just how predictable the market really is in the supposed unpredictableness of it. We can show you with absolute precision how predictable the market is. It's not as unpredictable as you think it is. Yeah, you'll find that watch how you fall into the belief patterns that people set out for you, Zorro. I don't know how young you are, but don't let anybody program into your mind positives or negatives. Believe it for yourself. Find it, prove it for yourself. I'm a firm believer in lifelong learning, and if I meet somebody for the first time and they say, "Oh, you're going to meet this guy over here, and he's a real badass," I go, "Yeah, whatever. I'll find out for myself." I don't take other people's opinions of, especially other people. And when somebody tells you the markets are completely unpredictable, they're not. They can be volatile. They can inject liquidity. So knowing when and when not to get into the market is crucial. But like I said, you can pop in here every morning, and we're going to show you a level of precision and predictability. I will call the setups before they happen. I will call the candles before they happen. I'll say, this is what I want to see. I want to see it break away from here. I want a fair value gap here, and we're going to come back. It's going to tag that, and we're going to leave. We're going to aim for here and here. And then when that manifests, then you'll ask that question of yourself, the markets, are they predictable or unpredictable? And proof's in the pudding, man. Don't take my word for it. Don't take anybody's word for it. Watch, learn, and don't buy into this whole crap about everybody's trying to tell you that it's all one thing or another thing. Just watch and learn. You'll see. You'll see. I don't believe in trend lines. I don't believe in Bollinger Bands and MACD convergence and Elliott waves and all that shit. I do not buy into that at all. I'm just a draw a box on the chart kind of guy and wait for proof, for a level of support. And I'm very, very algorithmic. You'll never convince me of anything else. But I am open to learning new things. So keep that in mind. Yeah, I like to journal my trades. This is my journal. This is my video journal. I talk this stuff every single day. And for me, I'm just letting you folks just join in on my video diary every day. This is me calling the markets live, and if I'm wrong, I don't care. I don't mind being wrong. I just lost a trade right here. I was expecting to come back to here, and the moment it popped through, I'm out because I'm wrong. But I'm okay with being wrong. I'm totally okay with being wrong. Yeah, I can explain why I lost it. For example, this little area here, when it was coming back to here and I wanted to get in, my objective was, and again, this is what I was trying to prove to Kevin earlier, is once you get this, you can't always predict the high. Sometimes you can say, I'm gonna get in, I want support. So for here, I want some support on this and run for these equal highs above. And your stop loss would go down in here. If it does eat through that, as in this case right here, I wanted that to be my support. Then it tap, went wick through it, which is a first sign that I don't like that. And then when a body gets through it, my stop loss would sit up here. And if I'm wrong, I'm getting proved out before it hits my stop loss. I'm looking for my wrong entry, which is as soon as a body gets through this, I'm done. That's just my rule. I think Michael made reference to this once before about if you're wrong and the body gets through it, then or that it trades through it, then it's a sign of weakness. Then chances are you're on the wrong side of it. You can get out before it hits your stop loss. So as you start to get better and better at this, you start to cut down your stop. You're not taking a full stop loss. You're cutting your stop loss short because you know you're wrong, because you're looking for this little proof to prove that you're wrong. If you're right, you look like a star, man, because you come in at the perfect spot and it just rejects and goes away on you. I'll take it into account, and I've heard lots of people throw the phrase, the market is unpredictable. Yes, you're very true. There are tons of people out there saying it's unpredictable. It's very unpredictable in some people's eyes. So Again, you'll see. Come in and watch, and you'll see that there is complete predictability in this market. And there's times it goes nuts. And that's the time you don't want to be in it. But then you got to know how to predict when it's going to do it and when it's not going to do it. That's going to take years of studying this stuff. If you're committed to it, you'll get really good at it, of looking and watching how the market plays. And the only way you get good at it is by putting the time in, reading the tape, reading this chart, watching, learning about PD arrays. If there's any one thing that you can learn really, really well, learn all the PD arrays. Go back into Michael's stuff, into his core content, do the full 12 months of core content. You'll learn about PD arrays and how to mark up a chart. It'll take you a long time, but it's the best gift you'll ever give yourself. How old are you, Zorro, if you don't mind me asking? Okay, who said it? Sorry, Kevin. Have a great day, man. I hope you have a safe day, and I'll see you tomorrow. Going to cut the grass before I go to sleep. I'll catch you tomorrow. Zorro, nice chatting with you. Enjoy safe trading. Thanks for answering my questions and with your advice. It won't take years. It won't. You're 20. Okay. Good. Man, if I was 20 again, if I learned this stuff when I was 20, oh man, you take care of your future, take care of your kids, your family. There's so much you can do with this stuff. Take your time, stick in here, come in and watch us every morning and ask questions, but learn this stuff. Because if you come into this stuff and try to pick up what we're saying in the morning, you won't understand unless you've got some semblance of background on what Michael's been teaching. So definitely pop out, grab his core content that he's got out there. Don't go buying it from somebody else. Study the core content. If you have questions, come on in. I'm willing to help out any way I can. I'm all about sharing knowledge. I'm not here to charge you anything. I'm not here for any of that stuff. I'm here to give out free signals and free trades because I want people to be successful as well. And if I can be successful along the way and help people out, that's my goal. But I don't want you to have to rely on me. I want you to learn this stuff so you don't have to rely on my trades. I'm sure you hear the phrase, filter out the noise. There's so many methods that ICT Michael teaches, but no one that works. But find one that works for you. That's your bread and butter. It got me a $100,000 funded account. You got that right. In 3 months of time, really nailing down, only trying to learn that method and no other methods. So true. So true. And he's got the discipline, though. Kevin's got the discipline to follow through. So if you have discipline, Zorro, my friend, you will find your setup and you'll nail it. You'll slowly cheese your way to the... Just eat like little nibbling cheese, man. Just nibble out of the market. Don't get greedy. You're going to be fighting yourself, a lot of emotional stuff, a lot of fear, anger, greed. Anger or fear and greed are the two big things that will destroy your accounts. And overconfidence. Those are the big things. That's the big advice I can give you. Yeah, I've heard that phrase. There's always an emphasis, rightfully so, on picking your own strategy. Don't blindly follow somebody else's one because it might not work for you. Hey, really go. All right. Really going. Gotta cut the grass. But I'm gonna wear shoes. No grounding for myself. I don't want to wear I don't want green feet. I'll see you tomorrow. See ya. Kevin. Also, yep, I want to be familiarize myself with some of the terms that you've mentioned. So I'll be watching the ICT Mentorship 2022. Yes, good for you. Oh, and going to look for a microphone on sale at Amazon tonight. at work so I can join with you on the call. Yes, that'll be great. You know, we have Zorro, you're not aware of this yet, but this is the Breakfast Club, but I also have a live. You can come in and chat with me live, so you don't have to sit there and type on the sidelines all the time. You can kind of just watch the charts with me, and we can just sit here and chat like a couple of normal people. That's what that's for. So hopefully we'll get to that point. If you stick around long enough, you'll be invited to pop into the Breakfast Club live chat versus having to type it in on the sidelines for a while. But that's it for me. We're again keeping in mind your upside objective for the day is looking for that push up. Looks like we're still pushing through, which is great. Look for these run on these highs back to the high of this daily fair value gap. That's the big space you'll see on the daily right here. Real quick, it's this up close candle's high and this up close candle's low. That wick low and this wick high, that space in there is what we call a BISI, a buy side imbalance, sell side inefficiency, which means there's no sell side delivery there. So what we're looking for is as price starts to run back up, we're looking to get back inside this. So these areas of sensitivity are the high, the middle, and the low at basic level. There are other levels inside that, but for you, basic, high, middle, and low. The middle is called the threshold or the mean, the consequent encroachment. So CE or consequent encroachment is the middle of that fair value gap. So we're looking to run back up into that, or at the top of that, sorry. Area sensitivity, we're at the top of it. We've already hit the middle of it, top of it. Now I want to react off of that, and I want to see it start to come back down again. The pink that you see is the monthly fair value gap. Gray, for me, represents weekly fair value gaps. So I like to mark out my higher time frame premise, which is weekly, monthly, daily. Those are the colors, so that when I'm down in these lower time frames and the colors that I see coming up, I'm in the month, I'm in the day. So I know how those work. And then there's a big gap in here. This is called a liquidity void or a natural gap. That means there's no buy side or sell side delivery of price. But that's going to be it for me today. I'm splitting. I'm out of here today, and we'll see you again tomorrow. This is a little longer than I was expecting for my trade, but thanks for popping in, Zorro. Welcome, welcome, welcome. It's nice to have another new face in the pile, and we will see you tomorrow. I start doing a little pre-market analysis around 20 after 7 Canada time. I don't know where you are in the world, but that's like 20 after 9 New York time. And I will go till usually 11:30 New York time, which is 9:30 my time. So I'm not usually in here this late. We usually get our morning scalp and then move to the sidelines, and we'll wait and see what happens tomorrow. Anyway, that's my call today. Thanks very much for turning up. My name is Darren Hancock. I'm your host for the Breakfast Club. Thanks for turning up. And remember, it's a mean world out there sometimes. So pay it forward if you can. Share your wealth, show your knowledge with other people along the way, and we can make this world a better place. Stem the flow of hate, my friends. Gotta love each other. Take care. We'll see you tomorrow. Thanks again for turning up.